Hey, what's going on? It's Jeremy back. Been a minute. So I'm gonna keep this kind of short. I know I was supposed to start back the live trading this week. Just kind of went into a lot of back testing, not so much revising, but revisiting some things in the timetable and the time process of actually going in and identifying, some challenges, psychological and otherwise. Um, I will show you this first. Give me 1 second. Um, I've described having been a participant with TopStep before. I just wanted to show you that I was able to, and I can't. I have to just be kind of transparent and not transparent because there's a code at the bottom of this, and I don't want that to be the thing. But basically, they have what they call a fire drill. Sometimes they give you like a free reset. Some people will they'll give somebody, or they'll raffle off basically of all of the people that participate in the live streams that they do from Top Step TV. They're live every day of the week. If the market's open, they're there. They have a segment that's actually called Slow Markets with Dakota, or well, he's one of the coaches, but he also trades. Excuse me, trades futures as well. And they call that, I believe it's slow markets. So it's basically after the closing bell. So as price starts to slow down, and then you're getting into maybe the six legs for those that get out of their positions at 4:15 Central, but then have the opportunity to get back in an hour. So I'm Eastern Standard Time. So for me, that means being out of my position at 4:15. I'm sorry, 3:15 Central, but 4:15 Eastern, which means that the market's going to be closed for basically 2 hours, or an hour and 45 minutes, if you will, for me. So on the East Coast, get out of those positions at 4:15. You can re-enter the position if you choose to at like 6:01, because the market will reopen at 6 p.m. Eastern. But like I said, if you've not checked out Top Step TV, by all means, if you're new, if you're just getting into futures, myself, I came from basically currencies. I was terrified of futures in the very beginning. I looked at it, and it's just crazy now in retrospect, having done it for a little having done it for a little while. It's like the thing that I was most scared of is actually a little bit more comforting. And with the dynamic of trading currencies with spreads and slippage and all of the terms that most people look at and say, oh, that's natural. Futures like what you see is what it is. So I'll just simply say, like, the transition is not as great as you would think. Technicals are still technicals. There's still that fundamental. There's still the sentiment that's involved. But it was a pleasure. So long and the short, participated in a fire drill where they will give you like I said, free resets, account raffles and things like that for 50, 100K, 150K, whatever it is. Well, this one was to not demo, but to test out the TopStepX platform, which I think I just, I've tried the fire drills. I think they've done them. This is the third one, so 3 times is actually the charm for me. They did it 2 times this week. Tuesday, entered, wasn't successful. Yesterday, I entered, had a pretty decent feeling about it, and then this morning I get this email that says I'm on the list. But basically, it's exactly what you see on the screen. Up to 50K Top Step combined for $4.50 a month, $4.50 a month. The combine by itself, the 50K combine by itself is pull the wrong screen. We'll pull the wrong one. Did I put it back? Cool, awesome. Yeah, so the 50K regular price, $49 a month. So you do the math on that. But yeah, and I've gone through the process. What I've also done, which I think is awesome. I know this is like somebody else has done like a TopStepX feature, but this is something that I thought was like super cool. I don't want to keep this up too quick, but that's a trade copier. So basically, I've activated those accounts, but I've only put 2 accounts in. Like, one is basically like a master account, and only one other as a copy trade. So that's kind of what I'm covering up, is sitting here. So these are just 2 accounts. But you'll always know, like you'll see this one up here that'll say leader +1. So that basically means that whatever position I take in this account, I'm going to take on that other account. I've not attached the other accounts on purpose. So this is one of the ways that I can kind of be mindful of what I'm doing versus, mitigating the risk. Even though these are combine accounts, it's essentially teaching you or developing good habits in terms of, are you going to over leverage, or can you take a moderate amount of risk? And especially if you're working through multiple accounts, then you don't have to take as great a risk as you normally would, especially when you get into the XFA accounts. It's the same process. Once those are funded accounts that you can take payouts on, you're not looking at these huge moves where anxiety, your emotions are gonna wreck your psychology. So it's just another way to manage it. But I thought this was really cool. I'm not taking a position on any of the accounts today. It's a Friday, so I'm not necessarily of the mindset that says you can't trade on Fridays, because I want to actually pull up and see if I can pull one more screen over and see if this one marries like this last one did, because this is my today's the 1st of March, so I have a my funded futures account. So this basically, again, I'm transparent that way. This is actually a competition. So for the month of March, you can enter, as long as you have like an active account with them, you get a free entry into basically another funded account. So if I end the month of March, among the top 5 that participate in this funding challenge, I believe first prize is like a free 25K account. It's a funded account. So once you receive it, as in terms of winning, you can trade that account, and then once you meet basically whatever the payout threshold is, or wherever you want to take a payout, you're able to take a payout. So I think that's kind of cool. So that's what this is. I just established that this morning, but that's not what I wanted to show you. What I wanted to show you really quickly, don't want to take too much time, is something that I was working out. And like I said, I know somebody's going to look at this and be like, it's hindsight. He just drew that up on the chart and it's not. And the only thing I'm going to say about that, and I'm going to say about this, is you can believe what you want to believe. If you think I just put these lines up here just for clickbait or whatever the hell it is, by all means, believe that. However, this is something that I've been curious about, and this is the other reason why there weren't very many live streams for me or tape reading or anything like that this week, because I've been kind of not tweaking and working in other systems, but my brain has just been going, okay? I've come from the just completely random, arbitrary guy that was trading currencies, at the oddest times, where there was either no volatility, low volatility, no reason for that particular pair to be moving, or just not really understanding like time and price have a correlation. Like there's an optimum window for most things to happen. And my brain had been going for a while looking at time-based theories. I trade basically, and I've live traded like silver bullets, which are basically ICT concepts, but my brain is just kind of just evolved within those concepts to say, okay, well, if these things happen at this time, like what happens pre and post? So everything from macros to opening and closing price. And then I just this week, again, for whatever reason, I started thinking about the midnight open. Okay, so this was something that I tested against my better judgment. And this was before the TopStep combines came, but I had an account and I said, you know what, I'm curious about something. I'm curious what happens from the opening price, midnight, to the AM session opening. And this is what I found, okay? what you see up here is where there's like the Q1, Q2, Q3, Q4. This is, I'm a quarterly guy, so quarterly theory is also something that I'm just kind of back testing. And this is what I found. So this orange line denotes the midnight open, Friday midnight open. Okay, the movement above and below, I'll just give you this one really quick, super quick. If you're looking for a bias, potentially the bias is going to always be from the opening price, if from the opening of the market or opening price for that particular day. If price is above the midnight open, you're looking for sells. If the price is below the midnight open, you're looking for buys. That's like a very basic premise, okay? However, the underlying context is, even if you're above or below, that doesn't mean that as soon as it's above and it's there for a few minutes and you can automatically just jump in. Again, not completely arbitrary. You can't just jump in for a sell if it's above. So that's when I start introducing and looking at quarterly theory, and I'm like, okay, what would be optimum? I'm not going to get into all of that. That's going to take that's going to make this video like 45 minutes to like an hour and 45 minutes. So I don't want to do that. But what I was thinking about was, okay, we all know about an open, high, low close for candlestick structure. Open, high, low close, open, low, high, close. Or open, low, high, close. Right. So in both of those scenarios, I said, okay, well, how would that reflect in time? Right? Everybody draws things out, but I wasn't looking at it from a figure representative. I wanted to look at it from a time and price representative. So what I did was I said, okay, last night, Friday, I said, what the hell? Why not? I'm not doing anything today. Here was open. Price moved above, and ironically enough, in this segment of time, it would have been like the London Open, which starts at 1:30, and that runs until 3 a.m. 3 a.m. is obviously the London Open, which anybody that looks at time and price, you look at quarters, whether you do quarterly theory or not. In quarters, London is typically a manipulation. Okay, the London rate, all of that is predicated on a liquidity creation, a continuation, but ultimately it's a manipulation in price. Okay, so if this is going to be the manipulative portion of the open above, if it's manipulating and it's already above, my reasoning is it's manipulating to go short. Above opening is going short. Well, then it was, what's the target? What would my target be? Yours truly was looking at this, since I'm in a futures market. So this is the futures contract. So this is S&P. So it's representative of ES1 exclamation. So what I did was I said, okay, if I'm above, what can I target? What would be my target, ideally? So as I'm coming back in, hopefully you can see my cursor here. You can, okay? As I'm coming back in, I'm looking at the lows. And I'm looking at, okay, do I have a low? Do I have relative equal lows? Like, what do I have back here? So as I'm coming in, I'm going, okay, well, here's a low here. And I said, okay, what time is that? Well, that's 8:44. There's no, like, this is electronic trade hours. Nobody's actively doing anything. There's algorithmic price delivery, but it's not time and price driven based upon more potential liquidity in the market, i.e. independent professional investors. Like there's nobody that's in this time frame. If you're looking at London and you're looking at New York, we're not doing that. 8, a quarter to 9 at night, nobody's really looking at the market that way. Overseas, maybe Asia, Japan, in those areas, Sydney, stuff like that, like that's an active market for them. Okay, so I don't want to make it sound like it's just like if it's not New York and London based time, like it's nothing's going on, but it's going to be a low volume. So it's more manipulation, it's more consolidation and manipulation at that time. So am I looking for that? Not necessarily. However, there is a reaction there. So something to note. But what would it draw to? Because if this is the true open, then the true close is going to be what? 6 p.m. Okay? Just something, and I haven't started working on the 6 p.m., but I will back my way into that. So this is an 844. So I said, okay, no. Came down to this low. I skipped this one because it's in the same area, so relative equal lows. So I came here and I said, okay, that's 8:07 p.m. No. Came here. This is 7:46. No. Then I got down here and then I started looking at it. I said, okay, well, that's 6. Will we be looking at the open? It's possible. So remember when I said you got the open and then the 6 p.m. close? Okay, well, that's after 6 p.m. But what would be session related? So that's where this came into play. This nice green horizontal. And the time here was it's 2:53 here, but it's actually 2:52 because I actually journaled it. The next time I do a video, I'm going to pull up my Discord because that might allow some credibility for those that say cherry picked, whatever. But this was the level that I said, okay, it's regular. That's close enough to the PM session, the New York PM session starting, which is typically at 1:30, or excuse me, 1 o'clock. It depends. So it could be 1 o'clock or 1:30. I because I ascribe to a quarterly based, time based theory, I would say it's 1:30, not 1 o'clock. So I'll say, okay, this is an hour or so beyond that. But this is the closest level to opening, midnight open. Okay. So as we pull this back over, you're gonna see something clearly denoted. Okay. And you can go pull this up since today is March the 1st. It's 3:17 p.m. in the afternoon. This is something that you can go pull up on your chart through TradingView, through Awanda, whatever platform. You can even do it on a damn MT4. You can do it on a MetaTrader. It doesn't matter. You'll see this same exact thing. You'll be able to identify this same exact thing. So it's not anything that's been fabricated or reproduced or taken out of context or price movement, not whatever. Okay? You can see this yourself. You can see that the manipulation takes place in London during London Open, right at London Open. You see the price above the midnight open. You see price trade below. It does come back up, almost like another, if you will, like its own independent Judas. After, what is this? After about 3:32, it does come back up here and swings through. And I look at it and I call it a Judas because it basically creates its own breaker here. All right. So it comes down. The low within this time frame is at like 353. The high within that initial intermediate range is 343. Comes up, sweeps out the high 425, comes all the way through, sweeps out the low at 503. And a funny thing happens after 503. It comes back up into this range. It comes back up into a FVG. Let me scroll in so you can see it. And you're like, well, we can't see what you're looking at. We think you're bullshitting. I'm not. I'll even draw this out for you. It literally just comes to the bottom of this fair value gap here on a 1 minute. Within a tick, ticks it and takes off. And where does it take off to? Right to that low. Right back into this. And it reacts from that level and then turns into something else, which again, I'm not going to get into in this video because it'll be way too long. We're already coming up on 20 minutes. But the point of this whole video and discussion is, you know, there are a lot of us in this space that ascribe to different theories. We believe different things about price. We believe different things about price delivery. I for one will always say, if you're profitable in whatever it is that you're doing, stay with it. If somebody says that, you know, even if it's ICT concepts, if it's support and resistance, if it's supply and demand, if whatever it is that you follow, if there is an edge that you're able to carry into that, if there's a way that you can make sure that you mitigate certain losses, you keep your losses short, your profits long, you stay in the winners longer than the losers, you let the winners run, you cut the losers short, whatever the dynamic is, if you have an edge, operate off of that. But also, within whatever it is that you're doing, always look to refine and to get better. I realize that sometimes I can be impulsive. Not always a good thing. Don't always second guess myself. Sometimes I just look at something and say, okay, that's what it is. So I'm still at a point where psychologically I'm in a good place, but psychologically I realize I can still work on myself to where I can impose the little idiosyncrasy in the market to say, hey, look, I think and I know that this is where you want to go. Because even in this movement, if I'm honest about it, and I took it in a demo, I took it in an arbitrary spot. And then once I saw the fair value gap form after that breaker, I said, okay, I can get in there. Failure swing, there's a breaker, there's a fair value gap, I can get in. Like I got back in, but it was a demo because I wasn't 100% sure. I had a pretty good idea just based on how the structure unfolded. But again, say all of this just to simply say, trust your intuition. And if you see something in the market that's going to make you a more complete trader, because that's something that I strive to become every day, to the point where it's a little bit of an obsession, and I use the word little subtly. It's just something that I actually enjoy, but the fact that I enjoy it means that there's no such thing as perfection. But there is something that's always called, I'm always in a position to where I can be taught and I want to learn, because I don't know everything. And the more you educate and teach yourself, the better off you'll sometimes be in certain situations, right? So this is something that coming up next week, I'm probably going to spend quite a bit of time back testing. There should be a tape reading session that I'm going to go ahead and do on Monday. So we'll see how that goes. So hope everybody has a great day. I will see you guys then. Enjoy your weekend and take care.